Okay, so today I'm going to make a video about an indicator that I believe isn't used much or thought of much, but has great potential to help you show market direction and where the market is likely to go. And the way I primarily use it is filtering out whether I should be longing or whether I should be shorting in current market conditions. So it is the VWAP, and I believe it's a indicator that is not utilized as much as it should, because it does give helpful directions in where the market could go. So I have it down here, I have it on the 4-hour, and I have it for Ethereum. As you can see, it oscillates up and down around the zero line. I'm going to map out the zero line just so it's a little bit easier to see. I'm going to put it as close to zero as possible, and there we go. So it is a little too high. Let's move that down. Yep, that's good enough. So essentially, when you have a cross under and a cross back up, at this point you should be looking for longs, and when you have a cross down from up on top, this is a point where you should be looking for shorts. And this is extremely useful for botting, and you can use basically crosses on the zero line to help show where your bot should be longing and where your bot should be shorting. And that is a very useful thing to help your bot give direction, and also for manual trades as well. So let's go to some zones I marked out. I'm starting it on a 4-hour time frame. Oops, this one should be green. Starting it on a 4-hour time frame, and I am marking out some zones in which I would be looking for longs and where bots should be looking for longs and shorts as well. So as you can see right here, we have a cross from over going down through this whole zone until we get another cross up. That's where I would be looking for shorts. You get your cross somewhere on this bar or at the beginning of this bar, and then you would switch to longs. Right there, you would get a cross right around here on this bar. This should be over one. Cross on this bar, and then this zone, you should be looking for shorts. Right here, right after this bar, somewhere in between this bar, you'll be looking for longs. Of course, this is consolidation right around here, so this isn't ideal, but it still helps you give a direction. And when you have a large swing like this and then a pullback, that is a good indication that you're going to make a nice low oscillation on the bottom end, signifying a larger zone for shorts. So let's check this out on a lower time frame now that we've marked out our zones, and let's see how it would have done if we were looking for longs, shorts, or we were running a bot and we were using this as a filtration method. So as you can see right here, it is going down. I'm currently trying to program this to where it pulls data from the 4-hour only, but pretend it looked the same because we marked out our zones. As you can see in here, these are zones we marked out previously. This is a red zone where the overall high dropped in this zone to a maximum low of -10%, and then it's about the same, +10% that way. Right here, this is where we'd start looking for shorts. Nice shorting opportunities there. Right here, we're entering a phase of consolidation, but you can see the overall trend of it goes up. Then right around here, overall trend goes down, goes up. We have a nice break from consolidation, goes down. We have a retracement up, nice break going down, retracement up, and currently we are still in a red zone for Ethereum. You can use this on any coin, any currency, any pair. It works off of universal data, and it is definitely a good way to get an idea of market condition. And why I like this over, let's say, whole suite, which is another good indicator. It gives you full zones. So right here, this whole zone would be considered a red zone. You would have some spikes right here where it'd be green, but overall your indicator would say this is a blanket statement red zone, so do not trade longs in here. Same with here, blanket statement long zone. And what's awesome with this is it doesn't work the same way as moving averages do. There is less lag and less switches. It is used primarily to give a large basis and a large idea that you can extend over a period of zone. Right here, it switches a lot, but this is because it's on the 15. If we were to go back to the 4-hour right here, you can see it really solidifies the area of shorts. And you can always bump it up to a higher time frame and get a higher zone. But I find that 4-hour tends to work. So yes, this is a video about VWAP and using it for filtration for longs and shorts, and I believe it's an indicator that isn't used enough, isn't talked about enough, and when used correctly, when marking out these crosses from above and from bottom, it can be used quite successfully for trading and for giving an idea of what you should be doing and giving you just a little bit more boost in profitability and percentage and probability of a trade going through if you're deciding to long and short within a specific zone. But yeah, thank you for this video, and hopefully you can get something useful from it.